The third annual African Cup of Investment Management, which is being held in Cape Town, that's a conference, comes to a close today, and that brings together leading players in the African institutional and retail investment communities. We now catch up with one of those industry leaders, Vladimir Nedeljkovic, who is Principal Head of ETFs and Index Products at Absa Capital, discussing the merits of investing in ETFs. Good morning, Vladimir. This conference, interesting issues coming out of it. It certainly sounds like an interesting conference in these times.
Yes, good morning, David. Yes, the conference was very interesting. I think I've been at this conference for this is the third year I've been attending, and I think it kind of shows us the development of the investment market, especially the passive investment market. In the beginning, there were lots of discussions in the industry regarding active versus passive. Is there place for passive investment in the South African space? I think that debate is, it seems, already finished, and I think the consensus is becoming to emerge that passive investments, ETFs, and similar types of products have their rightful place in the institutional and in the retail investments, and that's specifically driven also by the government in the upcoming pension fund reforms, when they specifically talk about a low-cost passive investing. I think what's been interesting in this discussion this year is really talking about the ways to take the products that we have, all the ETFs and ETNs and passive products, and use them as components, as building blocks to create well-diversified, cost-effective solutions for pension funds, for institutional investors, but also for retail.
Like you say, these passive investments have their rightful place in the market, but one's got to question the timing right now of getting into investments like these. Vlad, we were chatting to Gavin Kors of BOE Stockbrokers a little earlier, and he highlighted that with all the volatility that's going on and, with the things being so murky at this stage, it's very hard to pick any sector at a time. One's got to become very stock specific in their investment strategy right now. To what extent does that pose a challenge?
Absolutely, but I think that is actually an argument for investing in these types of products, because first of all, one of the trends that we obviously saw it internationally, and we are seeing it quite strongly in South Africa at the moment, is diversification of exposure. So in the beginning, you could invest in ETFs basically exclusively in equities. Now ETFs and exchange-traded products in general, they cover all asset classes. They cover equities, they cover fixed income, bonds, inflation bonds. We have even the products covering money market instruments. We have ETFs covering properties, currencies, all sorts of commodities, of course, all sorts of exposures. And of course, one has to be invested. Institutional investors cannot hold their monthly inflows for their members in cash. They have to invest it in the market. The trick is how to optimize that investments, how to combine it into very diversified portfolio, and the ETFs as diversified as index trackers are, I think, quite appropriate vehicles for that.
Vladimir, we were talking earlier about gold and platinum, and the remark has been made on the show quite often in the last couple of weeks. If you believe that gold is strong, it went above 1700, psychologically important. Platinum, of course, as supply comes down, demand will increase eventually. Do you get into platinum through the ETFs or gold, or both, or do you buy the companies?
I think our obviously, as provider of commodity ETFs and ETNs, I think the answer for us is that really, if you want to get exposure to a particular commodity, then buy that commodity, and you can buy that commodity in various ways. I think the most convenient way is through an exchange-traded product. You are right. You mentioned previously that mining companies are, in essence, call options on the underlying, plus all the other risks associated with investing in a company. But again, if you want a geared exposure to a commodity, buy an option on a commodity. So I think there are cleaner ways to invest and and gain for the performance if you believe that a particular commodity, precious metal, is going to perform. So I think we believe in exchange-traded funds, exchange-traded products, and I think lots of investors globally, and that's going to be an extremely strong trend, do believe in commodity ETFs.
Absolutely. Certainly yesterday, that being the case, we had that word unlimited by the ECB president that was mentioned, putting markets and ETFs specifically on quite a run in yesterday's session. Vlad, let's explore at what cost. I mean, you mentioned cost efficiencies a little earlier. What kind of cost efficiencies are we really looking at?
Well, compared to alternatives, compared to active investments, ETFs in general, and I'm not talking about just ours, but ETFs in general, exchange-traded products, are extremely cost-effective. On average, ETFs in South Africa have total expense ratios, which basically means all the costs associated with the product, around 0.5% per annum. Lots of players, including us, are basically pitching our products at about 20 to 25 basis points, 0.25%, which is really just a fraction of what an investor would pay in investing in an active fund, or even in a passive tracker to a unit trust, for example. Of course, when investing in these products, one has to take into account, and that's something, again, as I mentioned, government is looking in especially in the retirement space. It's not just the cost of a product. It is a cost of a platform on which the product is being placed, and also the cost of advice. If one uses advisor in the retail space, or if you're talking about asset consultants and intermediaries in the institutional space. And I think the next challenge, and that's something that industry will have to attack in the next period, is how to get all these costs down, so that our retirement products that are currently amongst the most expensive in the world actually get in line with the rest of the world. So getting from 200 to 300 basis points per annum to maybe 50, 60 basis points per annum.